Okay, yeah, Airtel Africa full year 2026 results. This is NGS most capitalized stock. That's most valuable stock by capitalization. It's Airtel Africa. Remember, it has dual listing. It's listed on the London Stock Exchange, and they did their secondary listing in NGS in 2019. So their predominant currency is US dollar because they span production around Africa, Mali, Malawi, Ghana, Zimbabwe, stuff like that. So they now use USD as their primary currency. So that's why you are going to see this report in USD. But if you are buying from NGS, you can always buy with the Naira using the prevalent exchange rate. So let's jump in. So the reported profit before tax grew over 114.5% year on year. That's profit before tax doubled, more than double. Then profit after tax moved from 328 million to over 800 that's million USD to over 813 million USD. So if you look at the headlines, they are very strong, but three layers beneath it sharpens the whole result. So let's go to the data so that we get an idea what it looks like. Okay, so it's loading up, so hold on a sec. Okay, first of all, we start with the chart. So this is the monthly chart of Airtel Africa, listed on NGX, Nigerian Exchange Group, that's formerly known as Nigerian Stock Exchange. So currently sitting around, if you look at the technical charts, you see when they debuted on the NGS, price was sub 400. Then all in with COVID-19, before you know it, price had swing low, swing high, swing low, swing high, swing low, swing high, swing low. Then there is a massive breakout in 2026, earlier 2026, massive breakout, and since then it has headed upside close to 5,000, roughly 5,274 naira per share. So that is it. Then so this is all the technical chart. So for the past how many months? 1, 2, 3, 4, 5. For the past 5 months, it has been headed up. No down month at all. So let's look at their books. So this is the income statement. Remember in USD. So you can see the revenue in 2025 was this. That's 4.9 billion. In 2026 is now ballooned to 6.4 billion USD. Then you can see the operating profit side of things. So the operating profit moved from 1.4 billion to 2.1 billion. So you see the percentage increase. Then for the FX, which is very much important, FS loss, FS gain. Then you look at FS gains too. You look at so this FX matters because most of them you are seeing is that they are FX because of the naira the multiple currency they are collecting. So this year, net on net, we still explain it, they had an FX gain. Also, even from Nigeria, because of exchange rate strengthened and stuff like that, so it was an advantage to them. Then profit before tax, you see everything pretty doubling. Then net profit now moved from what we now said when you deducted, then earnings per share, EPX, and then you look at the margin growing to 33.8%. You can read up on this. Then the EBITDA, that's earning before interest, tax, depreciation, and amortization. It all grew. net profit also grew compared to last year. Coverage ratio pretty nice, and sitting within the handle of 3x. Then revenue also grew, EPS also grew. So it's a pretty nice book showing that the business is growing, but the numbers behind the growth we are gonna dive in like we normally do. Tell you the segment that is doing well, what's happened policy wise, and maybe if there is any potential lawsuit and stuff like that. Let's show you the balance sheet. Hold on, the balance sheet is loading. So as the balance sheet is loading, one thing you need to know about that revenue. Okay, this is the balance sheet too. Also sitting in USD, you can see that the total assets grew more, over 16.1% from 12 billion USD to 13.9 billion USD. Then the equity also moved from 2.7 billion USD to 3.4 billion USD, over 25% increase. Then you can see that the total liability moved from 9.2 billion USD to 10.4 billion USD. But the ratios, the debt side of stuff, and these are not really on that clean side, but it is improving because the industrial standard for current ratio is it shouldn't be sub, so that you can be able to cover your short-term obligation. It shouldn't be sub 1, but this is sitting at 0.58. Although it is marginally increasing because it's coming off from the previous low of 0.51. The same thing applicable to quick ratio. Then the debt to equity ratio, which we just overlaid the total borrowing side of things, overlaying it with the equity, you see that it is now improving a little bit. Then the liability to asset side of things too, also marginally improved, because it means 75% of their asset liability, 75% of liability is tied to their asset. Like, look at the assets of this business, then you will not check how the liability to assets ratio, how many percent it is. So it moved from 76.9% to now 75%, means the asset is not growth, it's outweighing the liability, and that is what you want to. Then return on equity, return on assets also grew very well from previous low of 2.73% to now 5.83%. Very good. Return on equity also sitting within the handle of 23 points. 31%, almost doubling, just like the other one did. So it's a mixed balance sheet book, just that the liquid side of the business, working capital side of the business, is not really that strong. So the numbers behind the facts behind the figure, then this is the cash flow. So this is the cash flow. So you look at cash flow from operation, cash flow from investing activity, and cash flow from financing activity. So you can see how the cash flew in. Then the free cash flow grew very well from 1.4 billion to year on year now 2.3 billion. So that is close to 64.9% increase. So that is about cash flow. So you remember you can download these graphics from our X page. Sub to the channel, like, subscribe, and stuff like that, so that you don't miss out some further analysis. Now, if you're looking for more in-depth analysis at Nigerian and the US market, you can always reach out to the team to get access to our research cycle, which comes 5 cycle in a row. 5 research cycle in a row. The access fees for those in Nigeria is 50,000 naira. Then for those in outside Nigeria paying with other currency, you can pay approximately 30 USD. Then you access the research. It shows you both the entry, US stocks, Nigerian stocks, entry, the thesis behind it, in depth. Then you want to enter. Then if that cycle elapses, you will be receiving it straight to your inbox and stuff like that. Like we have said, okay, maybe we look into that, but it's just check our pin message so that you get what we are saying on this thing, and send a message in X, on X here. You get it. So for the revenue side of things, so when we dive into the revenue, it's not just to say revenue grew by this. You need to dive in to see if there is any devil in the detail. So the revenue is actually genuine revenue growth driven by real volume and price gains. So both pricing increased and volume increased, ranging from the data average revenue per user grew closely, which in telecom we call it ARPU, grew over 16.2%. Then data customer base grew over 14.8%. Then their mobile money customer grew over 21.3%. Then smartphone penetration, they have this smartphone, they grew over 4.7 points. So pretty nice, well broadened out. Then for another thing that helped their revenues, of course, if you have been following the telecom sector in Nigeria, there was tariff adjustment. Tariff grew over 50% in Nigeria. The Nigeria Communication Commission, they approved it, so it helped. Then local African currency also grew against the dollar, so that roughly gave a revenue. So that dollar local currency growing against the dollar last year gave them a revenue. Also, they earned money from that. So that is why if you are summarizing the revenue in percentage wise, you can say that 80% of those revenue came from oppression, while 20% come from a regulatory play, example, the currency play side of things. Then because the operation spans around Africa, so the bulk of their earning came from Nigeria. Of course, you don't need to think so much about it. Nigeria is the populated black nation in the world, so they are the most populous, of course. So the revenue comes from Nigeria, and then followed by East Africa with the rest. Then another interesting thing they are doing is that they are doing they did a share buyback program, that's buying back their own shares. So they are one of the few companies listed in NGS that does that. So they spent over 100 million USD into buying trenches. So they bought into trenches, and it all ended in March 2026. So spending over 100 million USD to buy back your own stock. Then if you look at some of the claims, litigation and stuff like that, there is a new 51 million plus interest effect allocation dispute. So they had that with a bank, but we are not here to tell you this story, but it's still not yet rolled out, but it has been recognized and the case is on. Another one is that there is a capital commitment. So their capital commitment to building out stuff now moved from 303 million USD to 760 million USD. So that is over 151% increase. So this is about Airtel Africa. So you can always read up the summary here. As we said, let me see if I can get to that place. If possible, just check our pin message if you want to get our research. Among all this research we do, cover the whole market. If you want to dive in to know the right thing to buy, the right time to, very much important, like we always lament. If you overpay for stuff, it's no longer great. That means you need to wait it out. It can be a great business, but you need to know the time to buy, the time to wait, the time to whatever, take profit or whatever you want to do, because at the end of the day, timing is very important in the market. You don't just blindly buy in, and when you are being caught on the wrong side, you start saying, I am averaging out, I am a long-time investor. Yeah, you're a long-term, but within your long-term play, you also need to buy at the right time. There is a time to always buy, price-wise, so that your downside risk can be curtailed. So see you in the next analysis piece.